All right, everyone. Good morning and welcome to ICJFX. I have a lot of setups on volatility index. Say volatility 10, V10 1x, 25, 25 1s, 50, 51x, and then I have at is it step index? Let me switch to step index. Okay. Well, let's talk about how we cut this trade now, this running trade. That's what I want to talk about today. It's just going to be a very short video, but it's going to give you a lot of idea of how the market works. Okay, so going down to the daily time frame. Daily time frame. I saw this. I saw this move. This is an uptrend. It's an uptrend. Okay. This is the recent low before it moved to the upside, before it got to this point. Okay, so I saw this. I said, okay, no problem. What I'm going to do is to first of all map out my trend. My overall trend is going up. Okay, but my overall trend is this one going on here now. 1, 2, 3 to this zone, to this zone. That's the overall trend. Then the the counter trend is this one, running from here to here, from here to here. That's the counter trend. Okay, so spotting out the overall trend, I now marked out my support and resistance zone. This is the highest, the overall, let me call it the highest high, or the overall support. That's the highest support, the highest resistance, sorry. Why this is the recent resistance. Okay, I marked out these two zones, 1, 2. Now I was waiting for market to hit this particular zone before I would take my buy. You get, but how the market gets to this point is what matters. So what I did was to step down to the lower time frame. Let me go to 8 hours. 8 hours time frame. You can see the trend running. You can see the trend. This is a trend. This is a trend. From here it countered, and from here it continued. Okay. Also, this is another trend running. This is another trend. This trend, very important trend. This one is the most important one, if I may say. Okay, why this is the other one. So I waited for this market to hit. Look at the trend. 1, 2, 3, 4. And then it fell down here. I didn't count these ones. These are not trend. Because if you watch well, this trend, this is the high, this is the low, this is the high, this is the lower than this previous low, this is the high, higher low. You understand? Sorry, lower high, lower than this previous high. Okay, and if you watch within this place, this lower high and lower low, you observe that the market did not break here, but the market broke here and created a new low. Okay, so you can count it, but for me, I don't really count it. I expect the market to hit this zone to give me a new low. Once the market hit this zone, I'll be okay with that new low. But once it hasn't gotten to this zone, I won't be okay with that new low. Okay, so that's that. So when the market got to when the market got to this zone, when the market got to this zone, okay, I knew that it's time for us to be able to strike. So I stepped down to 1 hour. 1 hour. Observe what happened in 1 hour time frame. Observe what happened in 1 hour time frame. The market came down, went up again, came down again, started creating something like inverse head and shoulder, reversal pattern. Are you seeing it? Started creating something like an inverse head and shoulder. This is the left shoulder, this is the head, this is the right shoulder. Okay. Now I enter the market around here. I enter the first market around here. Okay, since I saw this bullish run that gave us a morning star. That give us a morning star. Observe how this previous candle, 1, 2, and how this one passed these previous candles, 1, 2, 3, 4, 4 hours candle, and only 1 hour, one hour candle passed it or engulfed the whole 4 hours candle. So this is a good buy. Okay, this is a good buy from here. And then look at what happened around here too. It went up, came down, created another shoulder. This one gave me another confirmation that this is going to go up. Clear confirmation that this is going to go up. Okay, so I step down to my 4 hours time frame, or step up my 4 hours time frame. This is a new buy. This zone, immediately zone was broken. Here became a new buy again. Here became a new zone to buy with your stop loss around here. Okay, so basically my stop loss is based on structure, not candle. I place my stop loss based on structure, not candle. What I mean by structure is this. Look at this structure. This is a head and shoulder pattern. This is where my stop loss is. Okay, if I am selling, let's say the market is dropping and I am selling. Let's say this is a trend line and then the market is dropping. Say from here, 1, give me first time touch, second one, 2, comes down and then returns back here again. If I'm selling here for the market to go down, I must put my stop loss on the previous high. That's what I mean by structure. Previous high, this is the structure, this is the previous high. The previous structure or the previous high the market made before giving us this pattern, before giving us this move. So that's what I mean by structure. I put my stop loss around here, whatever it is, even if it's 19.46, that's my stop loss, 19.4621. Use my calculator. 19.46. If I want to risk $20 or $50, $50 divided by 19.4521, whatever it gives me, 2.57. 2.5, so I might actually do 2.6 approximately. I'll use 2.6 for this trade, and if I'm risking 2.6 for this trade, if I'm risking $50 for this trade, okay, what I'm entering this market is 2.6 or 2.5, 2.57, let's say 2.6. So that 2.6, my risk to reward ratio is 3.14. Simply means $50 times 3.14. That's 157. That's 157 will be my take profits, whereas $50 will be my stop loss. Okay, so that's what I mean by stop loss based on structure. Now some people might actually do stop loss based on a candlesticks. Okay, those ones it works actually, but sometimes it will fail you. Sometimes you might actually give the market the time it needs to breathe or to display itself before it now start going to its direction. Let me give example of what I mean. Okay. Let me see if I can see anything here that looks like it. Okay, I'm not seeing anything here. Basically, I'm not seeing. But if you observe, structure based stop loss will save you a lot more. Imagine placing this thing here and putting my stop loss here. And then since I know this thing is going to downside, I might do 1 is to 2 or 1 is to 1. Let's say 1 is to 2. The market eventually went down. Observe how the market didn't get to this structure. Observe how the market gave us an ATP. Do you understand? So that is basically how I do my stop loss. If you watch all the big boys in the market, that's how they do their stop loss. That's how except they want to take a very big risk, they can actually do their stop loss based on candlesticks, based on the previous candle formation and all that. So that's that share for this for this stop loss stuff. So observe how, let me remove this. Now observe how this market, observe how the market rallied up from here. And the stop loss is based on the structure. Okay, if you observe, even if you placed your buy here and your stop loss is based on structure here, when the candle moved down as if it's going to go down, it didn't pass this zone. Let me zoom in so you can see it very well. When this candle, even if you bought around here, let's say you bought around here and you placed your stop loss on structural base, even if this candle went down, it didn't pass here. Out of 8 trades, if you're doing your stop loss according to structure, out of 10 trades, you actually get 8 out of 10 trades. You understand? If you're doing your stop loss based on structure, you can actually get 8 trade out of 10 trades, because it will be rare for the market to go down and disobey structure. Okay, it will be rare, and if it happens, it might be 1 or 2 times when the market wants to do a very heavy reversal or a very heavy pullback. So most times we look out for all those things and then we cut our losses short. Okay, and also for beginner traders, this is very, very good for you, because most times you want to make the whole $1,000 to $2,000 in a second, or maybe in 1 minute or 2 minutes. But with this, you know that okay, if I'm funding $20, I'm risking $10 here. Let's say I'm risking $10 in this V10. So my entry will be, the stop loss here is 24.90. Go to your calculator. I'm risking $10. 10 divided by 24.90. What I'm entering this trade is 0.4. 0.4. Now most of you guys will be asking me, how do I get 0.4 in my entry, since the reef does not accept 0.4 as minimum lot for V10. V10 minimum lot is 0.5, but you can achieve 0.4. How you can do it is to open a position of 0.9, go back immediately to that position and close that position with 0.5. You achieve 0.4 immediately. So, but if you still want to risk 0.5, which is $11, might be risking here. For people that have smaller accounts, $20, $50 depending. Now with this 0.10 you have now, look, the market has gone, you have 24.90 as your stop loss, meaning if this market goes down to this place, you're losing $10 or $11 as you calculated. Okay, but if this market moves 24.90 in your favor, you're gaining back that $10, which is 1:1. And look at the current move. Look at the current move now is 24.9322, meaning at this point you've gotten 100% of your risk here. 24.6. Okay, it's still ranging between 24.0 to 24.9, but at this point you're close to 24.90, which is close to your risk. Okay, it gives you time to flow. In fact, it gives you time to be able to see the market in a different way. It gives you time to breathe. It gives you time to not blow your account easily. But if you're risking, let's say you're risking based on the candlesticks. Say I want to risk based on candlestick might be on structure. Fine, you get it. But most time candlestick might not actually be on the structure, and then you're risking based on that. When it goes against you, you're losing a lot of money. So the best thing to do is observe this stuff and see how I go. So this is how I got the trade. I'm expecting this trade to get to this zone because currently it has broken the, where is that support again? Yeah, currently it has broken the this mini trend here. So basically we might be heading towards 90% through. 90% through means whatever the trend started from, once the market breaks that trend, it must hit that same zone the market came out from. And then before doing another thing, it might get there and then return, and I might get there, maybe pass it and start going up. For me, I'm expecting the market to get here. But at the same time, if you look at this zone, this is a strong zone, sort of. This is a strong zone, sort of. This zone. This zone is strong. So I might be targeting this one first. Because the market might get here. It might rally up from the downside like this. Cool. Hit here. Come back. Still do like this. And then hit here. And then start dropping. Depending. I don't know. But this is what I'm assuming. So in all these things, we we assume that the market might actually behave like this. Okay, that's what we do. But we don't tell the market where it will go. We look at what the market is doing, how the market is playing out, and then we go into the market and see how we can capitalize on it. So that's basically how I trade. Though we've not gotten there yet, but we are on our way to that side though. So I think this is a very small tip to be able to help some traders out there to really understand how trading works. Okay, so that's basically it. Another thing is, if this market breaks this zone, okay, the market breaks this zone, say rallies to the upside somewhere around here, then maybe retest, might be taking the market for a buy to this zone, which is 90% true for this area. You get this a channel. So this channel, if this channel is broken and retest just happens, I'll be taking a buy from here to the 90% true. So it's something that we need to take note of and observe. This thing doesn't form in 1-2 minutes or 3 minutes or 5 minutes, as the case may be. It takes time. It takes hours, days to be able to form. I know I've been waiting for this thing for over 11 days now. Let me check. I guess it's over 11 days. It's over 11 days. Let me see if I'm correct. Okay. Yes, I guess I'm correct. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, over 9 days now. 9 days. Say a week and 2 days now. Because these are all 1 day time frame. These 24 hours. So all the candles you're seeing here is 1 day time frame. Meaning 1, 2, 3, 4, 5, 6, 7, 8, 9. On the 9th day, I started observing it. Then on the 10th day, I now took a trade in this market. So if you observe to see that this area is a very strong zone, we took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 days for this zone to be broken. 14 good days for this zone to be broken to the downside. So if you're buying, I would say once you get to this zone, get out. Once you get to this zone, pull all your capital. If you still want to wait, close at least 70% of your profit. Because 14 days for this thing to break, it's not beans. It's a long time, and it might get there and still reverse like I talked about. So I guess that's it for today. If I have any other information on other trades, I'll still share. Okay, so Bye for now.